Greetings, Inderes TV viewers. Sampo published its fourth quarter results. Today I'm interviewing Group CFO Knut Arne Alsakeria here at Sampo headquarters, Helsinki. Knut, congratulations for another excellent quarter. As usual, it was strong. Can you walk through the results and highlights?
Sure. Let me bring out a few elements. 2023 was a year with strong premium growth across the board. We had 11% growth when adjusting for FX effects for the group as a whole. That follows about 6% in the Nordics, where If was particularly strong with 7% growth, and more than 30% in the UK, following significant price increases because of the claims inflation. So premium increases were strong. Then we had another year of resilient underwriting margins. We improved If's underlying combined ratio with 50 basis points. Then we have, as always, a good cost control and improved cost efficiency. So also the cost ratio improved by 30 basis points. Then, of course, we had an excellent investment result, an investment return throughout the year, not least in the fourth quarter.
What was behind the excellent investment returns? Was there something unusual or business as usual?
In some way, it was business as usual. And what I mean with that is that we have, for a period of time, lengthened the duration and done that when rates also have increased. So our running yield, the sort of coupons that we receive on our fixed income is higher than what they used to be and contribute positively, of course, to the increase in investment return. Then what we saw in the fourth quarter in particular was that rates went down, which obviously increased the mark-to-market return on our fixed income portfolio. And then we have an equity portfolio, which isn't the main part of our investment allocation, but still an equity portfolio which performed very well throughout the year.
I think I have asked this before, but has it been easy to hike prices because of the claims inflation?
Easy is a term that's difficult to use. I mean, we're not alone to observe the claims inflation that we have in the Nordics and in the UK. So the need to increase prices to cover claims inflation certainly goes for all participants in the markets. Then I think companies have done that a little bit differently in terms of timing and in terms of size of the necessary premium increases, which you also see when comparing results. But it is, like I say, it is necessary. So we have no choice. When we have the claims inflation that we have in our markets, we always need to price for that important risk factor.
Let's talk about the weather. The weather was quite adverse in the Nordics in the fourth quarter, but still you had this very good operational excellence, especially compared to your many peers that maybe had some problems. So what explains the difference?
Just on your term adverse, it was certainly contributing to winter effects or weather effects in our result more than it has done over the last 3 or 4 years on average. But I would call 2023 a year with weather impacts, which we will have from time to time. The sort of probability of having a year like last year is not extremely small in the markets that we operate. So it wasn't exceptional, but it was certainly higher than what we've had the last 2 years. Then, of course, what we have is diversification effects which are significant. We operate in many different markets. We operate in different customer segments. We sell a number of different products, and you don't have the same weather effects across all of these parameters or all of these angles, so to speak. So that diversification effect comes through in the total result. Then, of course, what we continue to do, even when there are snow or rain or storm, is to have a disciplined underwriting and price for the risks that we take on our balance sheet, including weather risks, of course.
Exactly. One question about investments. I think your group CEO mentioned that even though the combined ratio is already very good and you're very cost effective, but still you do constant investments to become even more efficient. So what sort of investments they are, and how low you can get the combined ratio in the long run?
What we have invested in continuously all the time, of course, is digitalization. And those investments show up in our performance in different ways. Of course, it makes it possible for us to spend our IT budgets in the best possible way, create good products and services to our customers, which also makes retention levels for customers high. Customers stay with us because they like the digital services that we offer them. And of course, these things over time, not dramatically in 1 year, but over time contributes to strong underwriting margins. And you've seen that in our results over a long period of time. So, and 23 was no exception to that.
If we go to Hastings, you seem to be quite bullish that Hastings' profitability can be improved notably going forward. Why?
I think we've been through a couple of years with a very high claims inflation level, which has impacted profitability negatively. And claims inflation rose sharply during a fairly short period of time. And when claims inflation quickly came to double digits, it wasn't the level that we at that point in time had priced for. But obviously took pricing actions. I talked about the importance of pricing for claims inflation earlier, during 22 and during 23. Now, when you increase prices, you sort of get higher gross written premiums, but it takes some time before those new price levels are earned through in the profit and loss. And of course, they now start to do so, and we had a really good end of the year in terms of underwriting margins. Then, of course, we will also, going forward, make sure that we balance for Hastings, for all our P&C business, balance the margin focus and the possibility also to grow and thereby grow the underwriting profit, which you also can do by having more customers, more policies. But with the end we had of the year, we have sort of we enter 24 on a positive note. But having said that, claims inflation remains high in the UK and is still a risk factor for profitability in the UK market. But we do see that these higher premium levels now are being earned through in the P&L, as I mentioned.
Also, competition is a lot more intensive in the UK compared to Nordic markets. So do you think that will there be enough market discipline so other competitors won't eat away those hikes or improve profitability?
Let's see. It's difficult for me to say exactly what competitors will do. Sometimes you wish you knew that, but of course you don't. What we saw in 23 was that we were certainly not the only company in the UK market that increased prices because of claims inflation. And going back to what I already touched upon a couple of times, you do need to price for one of your biggest risk factors, claims inflation. If you don't do that, your profitability quickly deteriorates. So also in the UK market with other skilled P&C companies, they need and did take the same actions as us during last year.
Okay. Topdanmark's recent business performance has been a bit underwhelming. Should investors be worried?
There's nothing that Top said in their full year release where they pointed to the fact that investors should be worried. Then of course Top has, compared to some of the features we have, in terms of diversification, for example, Top lacks. Top is when it comes to weather, which impacted their fourth quarter results significantly. They are dependent on the weather in Denmark. And if the weather in Denmark is bad, sort of companies which only have Danish P&C business will be impacted naturally. And then they also have a little bit less diversification in terms of the other diversification angles I mentioned. In terms of Top at large, Top has a little bit lower growth than what we have in the other P&C segments, and then they are going through, which they talk about and which is well known, heavy investments on the IT side, where that obviously means that the costs and spending they do in those activities and projects are higher than they were a few years ago.
I know the next subject is a bit uncomfortable to Sampo always, but last quarter you didn't buy any Topdanmark shares, and the quarter before that you bought shares, and I think the share price has been quite in the same level. So wasn't there any blocks available, or what's your explanation?
No, exactly. I mean, we already are a significant shareholder in Topdanmark, owning half the company. To add 1 or 2 shares on a daily basis doesn't change anything. And we bought blocks before and had no such blocks to buy in the fourth quarter.
Okay. Going back to those good investment results, in the CEO statement, Torbjörn stated that as a group, we are comfortable taking measured investment risk in order to enhance earnings over the medium term. Can you shed more light to this comment?
Yeah, I think 2023 was an example of just that. We added a lot of earnings by investing the money the way we do. And also if you look over a longer period of time, Sampo's investment performance have been clearly above the risk-free rate. I mean, it is of course a natural part of an insurance company's business model to also be an investor.
So do you have a higher equity weight than your competitors on average, or?
It depends on who you compare to. Our group equity weight, if you look away from the couple of private equity assets, which we still have in Sampo PLC, is below 10%. So it's not the material part of our investment portfolio. Our investment portfolio is fairly simple, where it consists mainly of fixed income assets, and the vast majority of that is high grade bonds. So it certainly is a low risk investment portfolio as such, but we do think that it makes sense to have a little bit of investment risk and allocate the part of our capital to market risk to generate a return, a good return over time for our shareholders.
Could you have even more market risk if we think that you do underwriting profit every year? So I think in theory you never have to pay back the float. So you could do like long-term, more riskier investments.
But that's not our business model. We are an asset gatherer just by the fact that we get premiums before we pay claims. So during that period of time, we do need to invest that money into somewhere. But it should be a low risk investment portfolio because our shareholders invest in us because of our excellence in underwriting and creating underwriting profit primarily. So that is the main driver for value for our shareholders. But adding some investment return on top of that underwriting profit, just because that is our business model, and also as a detail, the length of period where we get premiums where we pay claim is a little bit longer than maybe your average P&C company because of the way that some of our products are structured, where claims are paid as annuities over a long period of time. So it makes sense for us to use the possibility we have as we sit on this premium money before we pay claims to take some investment risk. But to hoard money, to take more investment risk, I think you've seen from our capital management framework before that we don't consider to be the way that we want to run the balance sheet, where we today again announced an increase in our regular dividend and a little extra dividend on top of that. So to have an efficient balance sheet, but of course a solid balance sheet is a part of our model as well.
Thanks for interesting answer. You don't give any guidance, and I think you will give it in the Capital Markets Day in the beginning of next month, but can you shortly describe maybe market situation or your outlook, or do you leave it to the Capital Markets Day?
The outlook, the board didn't issue today for that reasons, and that is the only reason. We have a Capital Markets Day coming up in 4 weeks, so that's not a long time until there will be an outlook in the financial statements, which will be released in March, and obviously we will talk about now we talked about the history today with 23, and we will talk about the future and outlook and out on our CMD on 6th of March, where you are very welcome to listen in.
Thank you very much. I'm looking forward to Capital Markets Day and our next interview. Thank you very much for the interview.
Thank you. Thank you for coming.